Hello and welcome back to Wealth and Wisdom. I'm Kenny Polcari, your host, and today I'm visiting once again with Mike Larson. And many of you know Mike. He's an editor here at Weiss. Has been around for 20 plus years. Let's just call it 20 plus years. Both of us are graduates of BU. Now, I'm a little bit older than Mike, but that's okay. He's following in my footsteps. But Mike is the editor of 3 Weiss products. So let's just talk to Mike a little bit about what the different products are and what really attracts the different subscribers to each product. So Mike, talk to us just a little bit about the 3 different products.
Sure. Yeah, I mean, I'm involved with a couple different things. Heat maps is sort of our lowest, almost entry-level type product where we're taking the Weiss Ratings model, which is time-tested. It's proven over time to do a pretty accurate job of identifying the strongest stocks, separating them from sort of the mid-tier stocks and the ones that probably don't belong in your portfolio that are sells. Right. Again, so what we've done is we've taken the overall universe of stocks we rate and then broken down by category of in some cases sector, in some cases style approach, and given people access to these things called heat maps, which have the top stocks in those various sectors. So we have a heat map for fastest rising dividend stocks, and just like the name suggests, that's going to give you the highest rated stocks that have increased their dividend the most and performed the best in a recent period of time that it tracks. There's the precious metals and resources stocks, so it gives you the best stocks in that sector that are involved with precious metals, base metals, things like that. So again, you go through those heat maps, they break it down by category, by momentum stocks is another one. So if you're into like high momentum investing, but you still want companies in that space that have high Weiss ratings, you can get that through heat maps, and you just get this data pretty much updated every trading day of the year. And then I'll also, on a bi-weekly basis, you get an analysis of what the numbers are and what the names are saying to me. Like I'll go through the list, be like, all right, I see there's a lot more energy stocks showing up in the overall highest rated sector, and you're seeing less financials. Okay, what's behind that? So my job for you, the subscriber, is to basically say, here's what I see in the data, here's what I think it means, and here's what you should do about it. So that's kind of that entry level product to get people started. If they just want to be familiarized with what it is Weiss does at a low price point, they can go with something like heat maps. So that gets you in the door. Next up would be something like the Safe Money Report. It is our longest running newsletter at Weiss. We've been publishing this newsletter in one form or another since the late 1970s. It is designed for your core holdings, your core portion of your portfolio. So you're not taking excessive risks. You're not buying all kinds of high risk stuff. The portfolio is tilted towards income type names. It's tilted towards companies with solid Weiss ratings, A's and B's, and if need, sometimes you can get some C's in there that are solid holds as well. But they're going to, again, give you better than market yield. They're going to give you strong dividend growth. They're going to give you less volatility than you see in other parts of the market. Again, what you want to do with your kind of like your bedrock core part of your portfolio, that's what Safe Money is aimed at helping you do. And then last but not least, we'll talk about the third, just jump into that one. That's Weekend Windfalls is what the name of the service is. Right. And in Weekend Windfalls, what we're doing is trying to generate income from selling options, primarily put options and put spreads. You'll get an issue every week, every Friday, that most weeks out of the year, sometimes depending on what the market does, we don't have a new trade, but most weeks out of the year, you're going to get a recommendation to sell a put option or a put spread on a high income, high quality stock or ETF. If we can't find what we're exactly looking for in an individual stock name, sometimes we'll do ETFs. And what this does is it targets weekly income of about $1,000 by selling put options. By selling a number of put options, you collect premium, you collect income from doing that. Right. And that allows you to do is generate some additional income above and beyond what you might get from just investing in dividend paying stocks or ETFs.
And what happens if somebody is unfamiliar with the options market?
Sure. I mean, in that, there's a lot of people out there that either have not dabbled in options or just, have heard maybe that it was too risky. So they're kind of scared by even the options word. Right. But the reality is this service is focused on selling options versus buying options. When you sell options, you have a much higher success rate. A lot of times when you buy options, you're just basically speculating that a stock's going to go up or it's going to go down. But you only have a certain amount of time for that to work out. And you also pay a premium to the option seller for that right. And if the stock goes nowhere for 3 months, and then on the very day after your contract expires, it goes up 50%. Guess what? Your contract gets ripped up and it's worthless.
Right.
Whereas when you're selling options, you're taking the other side of that trade. You're allowing somebody to put their stock to you. When you sell a put option, you're basically selling stock insurance or ETF insurance to a buyer. And most of the time, the insurance works out for you. The success rate can, in general, for the whole options world, is about 80%. 80% of options purchased expire worthless. When you turn around and sell options, you're kind of on the other side of those odds. And we think that by using our system, our Weiss ratings, doing a lot of back testing and tons of research, that we've actually been able to achieve a higher success rate, even than that 80% in terms of longer term back testing and actual real world performance. So again,
no, you have. It's a great service. It's really a great service. And I love, when it comes out every Friday, the headlines are great, right? Or another $1,100 this weekend or whatever it is. But it's a very catchy service, and the headlines are great. And the service is very kind of clean cut the way you describe it.
Yeah. Yeah,
absolutely. Let me go back. Let's go back to the heat map stocks once again, though. I just want to ask you a question about that. When you look at that, it's got a list of the highest rated stocks, meaning they're all A listed or B listed, right? But those names are not, like, for instance, you got United Health Group in there, right? It's an A listed stock. That's not necessarily the kind of name that's going to change. That rating isn't going to change from A to C overnight.
That's correct, and that's why each individual heat map, and we have a highest rated stocks heat map overall. That's the 25 highest rated in our entire universe. Right. And you mentioned United Health; they're the second stock on there. Ironically enough, the first stock right now is a company called Weiss Markets.
Weiss Markets,
with one S in Weiss, not us. I promise
right.
That's pure coincidence. But
right.
That's a supermarket up in the Mid-Atlantic states. But in any event, those are those kinds of companies. I mean, General Mills is another name that's in there that are yes, they're pretty stable. They're not going to change a lot. But then you also have, again, there's a best growth stocks heat map. There's a best high income stocks heat map. There's a best energy stocks heat map. So there's different categories where you're not just looking for the best overall, which is of course a great place to start. Right. You may say, look, I'm the kind of investor who's focused on growth. So I may not want one of those stodgier names that might be on the best overall. I'm willing to take a little more risk, but I don't want to take too much. So what do? Right. You go to the best growth stocks heat map and you get the names that are in there. I mean, Cal-Maine Foods is there. Eagle Bulk Shipping is another name that's on there. These are the kinds of companies that, again, in the growth sector, in the growth style of investing, they're the ones that Weiss rates the highest. So that's how it's broken down. And
the best value stocks are stocks that are value names, not growth names. They're value names.
Absolutely. The list is ranked by the stock's price to sales ratio relative to the S&P 500. So what you're going to get there, again, is cheap stocks that, that not only have the solid Weiss rating, but that also meet this additional screen for cheapness, basically. And if you're a value, some investors love growth. Some investors like value. And if that's the kind of investor you are, that's where you're going to obviously sort of favor and trend towards.
And listen, some of those names in the value stocks, I mean, look at some of those dividends. 4.5%, 8%, 6.8%.
Yeah,
right?
Absolutely. You're getting that yield.
You're getting very good yield, which is another, part of that definition of the value name, right? Because you're getting a good yield, and the stock is and the stock is a good, solid company. So I love the way you have it broken down and the different kind of categories depending on what the client, what the subscriber is looking for, right? I also love the fact that that's all the Weiss rating scale for anyone that if you're not familiar with it, the Weiss rating scale has been really a solid performance. They've been around for just over 50 years. Dr. Martin Weiss has created this absolutely phenomenal rating system. So much so that, for people who don't know, when there was that big research brouhaha back at the turn of the century, remember, right? And there was a conflict of interest with all the investment banks because there was a conflict how they rated stocks. And so the government reached out to Weiss Ratings, which has zero conflict at all because they don't play the investment banking game. They just rate stocks. And to your point, they're very tough, right? Not everyone gets a prize. Not everyone gets a trophy. And so the government came to Weiss Ratings when that brouhaha happened and asked them to take on the role of taking the place of the ratings firms, which I thought was really, really fantastic. And it says so much about Weiss Ratings, and it says so much about their process that I think people who are not aware, they should understand that, because I think that's key. right? It
Yeah,
speaks.
absolutely. I mean, many companies, again, if you have that investment banking tie and they try and kind of say, we've got this Chinese wall, we're going to keep it separate. But, the reality is we're not taking money from the companies we rate. We're not, we don't have any skin in the game. Our ratings are designed to give you the best unbiased information, which, it doesn't mean every stock rated buy is going to go up. It doesn't mean every stock rated sell is going to go down, but we have put a ton of research into basically proving and time testing the model. And you do find that in aggregate, your A stocks are going to do better than your Bs, which are going to do better than your Cs, and so on and so forth. So,
right. And that, I guess that's the key, right? When you look at the history of it, when you look at how Weiss Ratings has done over the long term, they've really done an unbelievable job. And it's guys like you that write these great products, that have these subscribable products that attack the market from different ways, but give subscribers an opportunity to understand, to learn, and to play markets in a different way, right? Depending on who you are. Look, you're somebody who's 50 or 60, you may want more stable value, dividend-paying names. But if you're a 20 or 30-year-old, you're going to want much more growthy names, much more kind of sexy names, right? Which makes perfect sense because that's what you should do because you get time on your side, right?
Yeah. Yeah, absolutely. And again, what the heat maps, for example, allows you to do is by having those, you're still getting the best rated stocks according to the Weiss rating system, just in different style boxes, in the growth or versus value, or in that dividend versus momentum, whatever. But there's still going to be A and B type companies, regardless of what sector they're in, as opposed to just having a bunch of dogs.
Right. I'll tell you what I do is I take my own portfolio and I run it through the Weiss Ratings, right? I look at it. Sometimes I look at it every week, but at the very least, I look at it every month. I put my names in there and I see if there's been any ratings changes, but one or the other. I'm in the system anyway. So if there is a ratings change, I get an email.
Yeah.
But just in case I miss it, I like to put my own portfolio in there just to see how I do. And names that fall out of favor, I take the hint from Weiss and I get rid of them.
Yeah.
I toss them out.
I look at it, I think, people who come in and maybe, even if they're not subscribers yet, they just want to start out and understand what it is that Weiss Ratings does. I like to describe it as, it's a great way to check your own research. If you may think this company is great, you like their products, whatever, you've done your research, but, maybe you didn't think about X, Y, and Z problems that company is going to have. Pop their name in, and if it gets a C- or it gets a D+ or something like that, then maybe it gives you a little check. Maybe I need to do some more work. Or on the flip side, if you think it's great and wonderful, and you put it in there and it pops up a B+, an A-, an A rating, then the system is saying, from a completely no sort of bias, no qualitative whatever influences, the system is saying you are on the right track with that name. So I think that's where it's helpful for somebody, again, who isn't a subscriber, but they just want to check their stocks. They just want to see if they're on the right track. That can definitely give you help and insight into that sector. Right.
And people can go to the Weiss Ratings website, weissratings.com, and they can start to fool around with it. They can feel it. They can see how it operates. They can easily sign up for the different products. And if you're a newbie out there and you're on the fence about it, you should look up Mike Larson and you should look at his products because they are for sure outperformers. And Mike happens to be one of the shining stars at Weiss that I'm happy to be associated with. So, Mike, I appreciate you taking the time. As usual, it's always a pleasure to talk to you because I always gain new insight when I talk to you. And I look forward to talk to you in the future. We should probably check in about 2 or 3 weeks from now and try this again.
Perfect. Sounds good, Kenny.
All right. Thanks.
Take care.
Bye-bye.